Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and yesterday, I think it was yesterday, Bobby Knight died, the legendary Indiana basketball coach. I always loved watching him get mad. He has some of the greatest. If you want to be entertained, type in Bobby Knight on YouTube and you will see some great clips. The guy had a terrible temper, but he had a winning attitude, and that's what I loved. This guy, I want you to listen to what he says here, because so many people talk about how they want to win, but not everybody's willing to do what they have to do to win. Listen to what he says here.
Like we talk about the will to win. Well, let's eliminate the will to win and think about the will to prepare to win, because the preparation is much more important than the will. That everybody wants to win, but not everybody wants to prepare to win.
This is what I tell my son every day. My son has the will to prepare to win. This kid is a machine. This kid is out the door before I'm even up half the time to go get in more shape for baseball. Trust me on that. Our price is 61 cent XRP. XRP has moved up and is sitting there and holding where it is pretty good. It's looking good. Look what eGrag Crypto has to say. XRP God's candle, which he's talked about before, says it is coming. The request for a price of 65 cents is still ongoing. Nevertheless, my preference is for XRP to conclude this weekly candle above 55 cents. In the following week, it will be ideal for it to revisit the 55 cent level as a confirmation that a rebound is imminent and that the achievement of the $1 mark is highly likely. I like the sound of that. Check this out. This is a guy on CNBC talking about these interest rates and how bad it is.
I'm glad you went there, because the words may have been nearly identical. The statement certainly, as you said, was nearly identical. What's not identical to the last meeting is the move in interest rates. 10-year yield was 4.34, Jeffrey, at the time of the last decision. We've been talking about 5%. Certainly more recently closer to 4.9%, though you see the drop having today. And he does acknowledge the tighter financial conditions existing and the impact that that is having overall. So they clearly have been moved by the fact that the bond market's done a lot of work for them.
I think that's right. The higher for longer concept has a really dark underbelly to it that I think has affected the bond market over the past 6 or 8 weeks. And that is that the interest expense on our debt is going up by hundreds of billions of dollars, and it goes up every day
paid off.
That the Fed funds rate stays at 5 3/8%. And if the Fed's going to raise rates a little bit more, which seems less certain than it was, say, perhaps the last dot plot, well, then we're going to have a lot of interest expense. In fact, 50% of the treasuries supply in the public treasuries mature in the next 3 years. And so if rates stay at these levels, we're going to have an interest expense that goes up to $2 trillion on the federal debt. And that's what the deficit is today, is about $2 trillion. So we have this tremendous pressure caused by the Fed staying higher for longer. And I really think that the narrative is changing. I see it almost on a day-to-day basis now, that people are realizing that this interest expense problem is starting to come home very quickly. In fact, if we have a deficit that's 6% of GDP or 8% of GDP, in that range, which is the range we've been in, we will have interest expense that will be 50% of tax receipts in 5 years. And obviously, that's a really big problem. So one thing that the market has to confront is we cannot sustain these interest rates and this deficit any longer. In fact, I've started to refer to our debt problem and interest expense problem using the nuclear defense condition, the DEFCON. you know, if you're at DEFCON 5, everything's fine. But I think we're at DEFCON 3 now, and I think we're about to go to DEFCON 2 on this situation. Because if you look at the debtclock.org website, they show that we have $211 trillion of unfunded liabilities in the United States. And they also calculate that we have $219 trillion of assets, corporate assets, household assets, small business assets. In other words, our unfunded liabilities are virtually identical to all of our assets. And I just get this feeling that if the liabilities, if the liabilities get bigger than the assets, well, that's kind of like you're running a hedge fund and you're about to get margin called. It would mean that all of the obligations that we've made, we can't even, if we sold everything at today's prices, we can just barely cover them right now. It's almost like we're the equity holder back before the global financial crisis in a CDO squared type of financing scheme that ended up causing parts of the global financial crisis. We need interest rates to come down, or we need the deficit to come down, and neither of those are happening.
This guy just laid it out perfectly. This country's in a box, and it can't get out of it. They had to have a plan. They had to create a plan to collapse this system, and I believe the plan was to collapse it into the new digital system. I believe they knew this day was coming. Listen to this.
Some of the things that we're excited about, especially here, I would say in the region, adding obviously to what Jen and Andrew said. So a recent survey from an ecosystem player across UAE and Saudi actually mentioned that 93% of the high net worth individuals that they surveyed in the region are actually looking to invest in crypto. And that survey was actually done throughout the bear market. So we think that
so they're buying the wealth, they're buying, while 93% of the wealth, they're buying crypto while the blood was in the streets.
Institutional adoption, and when we say institutional adoption in the region, we're really talking about high net worth individuals, ultra high net worth individuals, say mostly on the family office side. We're still not seeing asset managers or, for what it's worth, like sovereign wealth funds coming into crypto yet. But we're definitely seeing deep pockets of money wanting to invest in crypto. And I think 43% of the high net worth individuals to ultra high net worth individuals that they surveyed are actually looking to allocate 5 to 10% of their net worth into crypto. So institutional adoption, I think, is something that is exciting that we see as an opportunity here in the region, along obviously with the tokenization that we've talked about at length. So those are two things that, from a regional perspective, we think are big opportunities to.
Oh, yes, they are. And I'm here. Look, Stuart Alderati, Wall Street Journal asks, is Gary Gensler ever going to win a case? Well, Stuart, winners focus on winning and losers focus on winnings. Gary has just spent too much time focusing on the winner, Ripple, and Stuart Alderati, and Brad Garlinghouse and Chris Larson, so he gets to be a loser. Here's from Ripple. For many of the world's central banks, discussion around CBDCs has shifted from if they will be developed to when they will be introduced and widely used. So CoinDesk actually featured James Wallace trying to finish this thing up. Oh, here's a good clip too. This is I guess this guy is Standard Chartered in Singapore. Listen to what he says.
Well, we live in a days of instant gratification. You won't wait 5 seconds for a web page to load. Why would you wait 3 days for a payment to settle? So
Bingo.
Let's go real time. The world is moving real time. So should payments and other forms of settlements. Well, we have had two use cases with Ripple. The first one was on trade finance, where we tried to solve the problem of duplicate invoice financing under the code name TradeSafe, in which we collaborated with DBS and IDA, the Singapore sovereign. The second use case is on cross-border payments. So we want to make cross-border payments real-time, instantaneous, with full transparency. So these are the two use cases we are working on.
Alrighty, and then we got this. I wanted to show you this. John Deaton out. Look at this. Is that, where is he? Is he in New York? Is that where that is? I don't know where. Oh, here it is. I was walking in Times Square with Warner Christina. All right, I guess that's one of his daughters. All right, check it out. Times Square, John Deaton's book. How about them apples? And he just came out with the audiobook version, and I told John that I am not a big reader. I read the news all the time, but I don't. It's hard for me to get me to sit down and read a book. So what I did is I had already bought his book, which he still owes me a signature on. But I also went ahead and bought the audiobook, and so I'm going to be listening to the whole thing in the next 2 days, because I will do that while I'm on the move, when I travel, when I walk. I will be listening to John Deaton's book until I finish it. I'm the digital asset investor. I'm not an investment advisor. Oh, I'm sorry, I didn't have to do that. We're going into the private group at DAI XRP, and what we're doing is we're delving further into the FTX organizational chart. And Stephen Narioff has just released 2 documents that are 2 emails that I haven't seen before, I don't think, that are emails sent by Joseph Lubin to some of those guys in the Ethereum circle. You're not going to want to miss that. Go to DAIXRP.com and check it out, because we're, I'm really talking about a lot of things I just can't talk about out here. We'll see you in there. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe. Hit the like button. Tell your friends at DAIXRP.com that all roads lead to one place, and it's all connected. And you come in and check this out. It'll blow your mind. Thanks for listening.